What is up, everybody? Today I wanted to do something a little different. I think notably for folks in MSAs, but I think anyone will get a little bit out of this, and it'll be a little bit of buy-bit manipulation, pressing the buttons, that sort of thing. Also, I'm going to work on identifying a setup, then entering a trade, and then watching the trade, right? So we'll see what we can get into. Give me a second to prepare. You won't notice a thing, and then we'll get started. Okay, perfect. Obviously, I paused it because I magically have on glasses. All right, so I wanted to do something to give people an idea of what's possible with regard to how to enter trades, right? So I want to give you an idea of, what I kind of look at, what's being measured, and how to approach it, right? Just again, some ideas. Depends on how intense someone wants to get. So I'm going to kind of take my time in going through some of these thoughts, and I want to kind of give people an idea of what's going on. If for whatever reason any of the algos stop working, occasionally they'll fail to load. You'll notice, like, where did the orange bars go? Where did the dark blue bars go? Like, we'll figure that out, and we can always adjust. So I want to go through a few things, right? I want to talk about like why we would do the things we do. Okay, so with that being said, here we go. All right, you'll notice this is one type of chart format that I use. You can see some of the really, really tiny super micro, nano time frames, we'll call them, going blue, right? So we can see 30 seconds, 1 minute, 4 minute going blue. These are just kind of arbitrary. They give me an idea of what's going on. Now I like to have a glimpse of some of the slightly more relevant time frames that give me perspective on the type of energy that I can maybe expect in larger time frames. So I am looking at the 4 hour. I'm looking at trends in the 4 hour. I am noticing, for instance, that this linear regression channel is breaking a bit, right? Doesn't mean it's going to break down, doesn't mean it's going to go into a full reversal. It just means that the current channel, the way it was, has lessened, right? The slope has actually lessened. So I'm not looking at that for strict respect of that channel. Okay, so keep that in mind. I notice, and everybody's going to look at this differently. I'm going to use white this time. But I notice blue over here, right? Which means breakdown, propensity. Doesn't mean certainty, just propensity for a breakdown. I notice blue over here. I also notice we have a nice little support here on the 4 hour. The 4 hour traditionally serves as a pretty strong support. So you got to be careful shorting right before a relatively significant support, right? Which is why I'm not in a hurry. I usually want to find a good position where I can test this support, maybe be in a short if I believe it's going to go down, but my entry is such that by the time we're there, if I catch a rejection, I have room to allow for a bit of whiplash. So again, we're looking at all the different time frames to get an idea of what kind of energies we have, right? So I see a lot of cool things forming. I see confluence sniper here for the 5 minute, or trend sniper, going a bit bearish, which is cool. There's a line running through it, so I'll try to remove that. So yeah, you see all three of those going bearish. Now would be a great example of when somebody will generally FOMO into a trade, right? Generally speaking, people will say, man, the train's about to leave the station. I see everything falling. They will hyper focus on the 30 second, the 1 minute, the 4 minute. If they even have this data, they'll focus on those time frames, and they will jump into this price action, which generally retraces just enough to take stop loss money from most traders, right? So kind of keep that in mind. But this is the data that we're working with, right? Secondly, let's go into some of the other things we look at. Secondly, we have information on the micro time frame, right? So this is basically your sub 1 day data. So I want to look to make sure that in my sub 1 day data, conditions are conducive. So as I look through this data, you see here's a great example of the breakout bars not working. So I would just reset that. I would simply, actually I would just go here and I would right click and then I'd apply, because I see the breakout bars are working on that box. So I reapply them, essentially rebooting the system, and then I see if box 1 doesn't pick them back up. And there they are, right? Now I have my blue, deep blue, I can see my blue on blue, and the breakout bars are back. The breakout bars are valuable, and so I want to make sure that I see them on all these time frames. I want to know what kind of energy is present or what's not present, right? We see that this 12 hour does not have a breakout bar present just yet. It's bearish. It's been bearish for 36 hours now, going on 38 hours. But as of right now, it's not cyan, it's not deep blue. So we have some perspective on what's possible, I would even say probable, right? But again, I always kind of emphasize, don't confuse the two. So we see what's possible on this time frame and even a little bit probable in the short term, right? Because we have to acknowledge that the 12 hour doesn't appear hardcore bearish. So now we get a little perspective on larger time frames, and we say, okay, look, we got to be really careful shorting, because look at what's going on with the 2 day, for instance. Breakout bars are working because I see orange on all of these. So if pressure was that powerful, I'd have to be cautious that hey, are the deep blues, why are the deep blues not showing up, right? So it might not be there yet, but it doesn't mean they can't form. And if I look at the 1 day, this supports my thesis for a short-term short, right? The same bearish energy that created this wick could be created here and create a wick or price action to take us down to the next pressure line in the 50s, right? We're going to watch for what's possible. I would say volatility clouds and trends, much like trends, are made to eventually be broken. And when are they generally going to be broken? Generally speaking, when they're flat and they've stopped climbing, right? The aggressive expansion has stopped, right? It hasn't stopped on the 2 week, which is why if you were to ask me statistically where I think we're at, what's going on, I'd say, well, this is a very, very steep incline. So I do believe we're still in a bull cycle. However, it's very possible that we retrace back to any one of these levels, right? Which is why we have these amazing clouds to do what we want them to do, okay? So this is the Binance chart, but it's fine. I'm just looking for an idea of midterm price action. Binance chart is fine for that. I'm not really using it for my entries. I'm using the Bybit chart for my entries, and you'll see why, because it ties a lot closer to real price action. So again, this is the Binance chart. So I'm actually, I would make sure that symbol is synced, which it is, and then I would simply go here, and I would make sure that for this one, I might as well use the perpetual contract chart, right? Might as well know what's going on with regard to perpetuals contracts in the ecosystem that I'm considering a trade, right? So you notice the price action kind of, still bouncing around in this area. So there wasn't a need to FOMO into it, even though for a moment there, it looked like, that was the magical moment and I needed to catch whatever, train downward was possible in a short, right? So kind of keep that in mind, right? That there's never a need to FOMO. FOMO almost always leads to bad decisions. Let me check. Yep, all that's good. And breakout bars stopped working on that one. No, take that back. No, they didn't. Okay, that's okay. I can do without that one. But you just want to make sure your breakout bars are working. You want to make sure that you can see the orange and the blue show up in your movement monitors. If you can't, you want to make sure A, they're working, and then B, maybe also find out and take a look and see if you can, if training wheels are on, right? We have some prerequisites for training wheels. All right, so this is what's happening here. We got an idea of what's happening here in the bigger picture. We know what's possible based on the 1 day time frame. We can see also, that volatility could easily take us up any given time today before 7 p.m. Central Standard or 6 p.m. Central Standard Time. Volatility could take us all the way up to 70. So, to ignore that fact that the data gives you, is folly. We don't want to ignore that fact. Right? This is just simply math, a statistical measurement of where volatility could take this asset in these time frames, right? So in the 1 hour time frame, in the next 41 minutes, volatility could take us there. In the next 12 hour time frame, so in the next 10 hours and 41 minutes, volatility could take us here, right? And they've given us the number on the side, 69,250. So if you know these things, you can react to them more appropriately, right? So these are really just cool things to consider. In a 5-minute time frame, we could go there, right? So in the next 45 seconds, we could literally shoot up to that, right? And if you watch a lot of the videos, you'll note that I like to enter, at resistances. And so a resistance could be construed as this pressure line, which might be a decent entry. Could be construed as any one of these volatility clouds being threatened, right? A lot of times we'll see an orange candle, and that will be a nice moment to enter. If you enter in one of these volatility clouds, right when it's being tested as a resistance, you want to enter one that is of a time frame that is probably going to hold, right? You can enter high leverage plays with stop losses and caution and, making sure that you're aware of all your risks in small time frames. But you also want to acknowledge that the 5-minute volatility cloud statistically is more likely to be broken sooner than if you happen to catch, a 6-hour or a 4-hour volatility cloud, right? So one of the things that I would probably look at as a bearish sign is if this volatility cloud begins to flash. And so when I say flash, it just means if price action becomes aggressive to the downside to where this begins to flip red, right? And what will happen is generally a red cloud will show up here somewhere. I don't know where. The math will tell the algo where to put that cloud. But right now, I'm not really on the 4-hour seeing signs of threat for this cloud just yet, right? And so in a way, you could look at it that by entering a short now, you are kind of entering at a support, right? But a 4-hour support. And so you have to just kind of ask yourself, is what I'm about to do intelligent? And so to enter here is probably more dangerous than to enter here. And if you happen to find, I'm gonna mess with some settings here, right? We always want to know what setting we're working with. So I think any one of these settings could be respected, but at the same time, if I want to kind of find and hunt down some logic, so you can see where the agile is, it's way up there in the 4-hour. Dynamic is there. So some of these have already flipped, right? So I could probably make a case for a couple things. I could make a case for ultra sensitive serving as support. Now you get to use the logic for all of these, right? So I'm going to use this as my support, right? I just synced it globally. So now any Bybit, Bitcoin, perpetuals chart, there's the flash, right? And so as we start to see the flash, things might kind of start to get a little serious. And so I'll probably I'm not going to have time to run through all of the KPI charts because I think that the trade is going to come a little sooner. As we start to see the flash, now we know that line that we just drew and we synced is getting more serious. And so we can kind of work with that, right? So now I go back to my more intense entry view, and I can kind of decide, what I want to do. And so I think we're kind of seeing a little bit of opportunity for entry, right? So being that it looks like we're starting to move in the direction of seeing that trend, I'm going to just use this as an example. Okay, so I'm going to go 5x leverage. I'm going to go look for a bit of a short. I'm waiting for the stop losses to probably get cleared out, right? We can kind of see what's going on here. We can see that price is retracing a bit, but if I look at the 5-minute trend sniper, it's bearish. If I look here at the 3-minute trend sniper to see what's going on, to look for a bit of confluence, kind of make sure that my thesis is going to be valid. I can see here we are in the bearish zone, pending bearish zone. Okay, I like that. If I look at, and you can have all of these on a separate chart somewhere, right? And you should be fine. I like that trend. I like the channel that we're in for these very, very micro time frames. We're in the transitional zone for the trend sniper in the 2-minute. Bearish zone though currently, just it's kind of testing, right? We see this up pressure. Previous candle was bearish, and then I might look at the 1, kind of ask myself what's going on there. Bearish zone, previous candle was bullish, and so it's a little bullish, but it's in the transition zone, kind of moving bearish. So that's all good. 5-minute, I kind of looked at that earlier. Bearish zone, pending bearish. So I think that for purposes of entry, things look pretty decent. Trend sniper in the 10-minute is all red. And if you look at the top line, all red. So these are the types of settings that are great for me. I really enjoy entering around this time. If I could get an entry close to the pressure line, that would be most welcome. And so this is probably what I would look for. I would probably have, if I'm a user, I'd have four boxes where I could see the trend sniper in those micro settings, right? I could see the trend sniper in like the 1-minute, 2-minute, 3-minute, 4-minute. And that is all I would do to have a little bit of a life hack on when to enter Bitcoin specifically. And so that's what I'm going to do. I'm going to watch for that. I am watching some of these really, really small channels, acknowledging that this 1, maybe 2-minute channel, being that it's going down, is the one that I'm looking for my standard deviation from. So I see that we're in SD2, which is a great place to enter if I'm looking for a short, right? It's usually a good place to enter. 3 is even better. So I'm going to go with something like 450. I'm going to mark this pressure line on my buy bid, right? So 64,520. Let's mark that. And usually we have time, right? 64,520. We know that I'm using the right chart. There we go. So 19 is just as good. All right, so with that being said, I would like to make that line a little thicker too. Let's go to a solid line there. All right, so now we kind of have an idea of what's going on there. We're going to look for this moment of up pressure to do what it's going to do. I see the 5-minute channel having been broken a bit, right? I can go back to showing you here. Right, we see these lines right here. I don't know if you could see it, but we see these lines. The 5-minute channel is breaking down. So as far as just a temporary move, I feel like if I can get a nice entry anywhere in this line area or zone, I'd be doing good. So I'm going to look for that so I can do it with you guys. Right, so a great short, and I want to have that asymmetry properly calculated. So a great short opportunity for short-term downside, acknowledging that let me see, did I have the 4-hour as, yeah, so the 4-hour was the one where we're kind of watching for that breach of the volatility cloud. And we saw that it's flashing. We see that it's blue. The 4-hour is blue, and I believe the 12-hour, I won't pull it up, but the chart I'm looking at, the 12-hour is cyan. So we have enough down pressure for a short to not be insane, right? It does make sense. Let me see if I can I get this to hide my asymmetry? Well, that's the opposite of what I wanted it to do. Give me 1 second. There we go. Okay, cool. So you can always take off, the stats when you want. And so what it does is it won't just leave them there. When you want to just look at the asymmetry calculator, you can. And so what I'd probably do is look for a trade, something like this. And so if price action, gets up here, I think I'm in good shape. You could technically market order it, or you could just set your limit order, right? And so I'm going to look for that moment of opportunity where the trend sniper data, again, let me go back, right? So you kind of see what I'm looking at. I already see that we're kind of, overall looking pretty good for a bearish move in these time frames. But I want to look for that opportunity where the trend sniper data is bearish or starts to transition bearish in these small time frames. So bullish, transition zone. Again, I would have 4 of these up at the same time, and I would just look for them to start shifting together. I may do that on another video. I just don't want to create one while I'm with you guys. But you can kind of see everything moving that direction. Bearish, transition zone, bearish zone. So when I see all 4 of them doing what I want them to do at about the same time, that's when I'll probably go in. So we'll go in this case, with the $1,000, and I think when it'd be valuable, I drew that pink line on one of those charts at about 63,969, right? So 63,969. Now what I think, or what I eyeball, doesn't really matter. What matters is where that volatility cloud mathematically calculated a support. Okay, so now we have kind of like our expected deviation zone for the top. That's where the pressure line is. And then we have our expected deviation zone for the bottom, right? And we can see where that is. I have the $1,000, and Bitcoin percentage-wise moves a lot slower than a lot of alts. So let's crank it up to 12. We'll go 13, right? So we'll crank it up to 13, and then we will look simply for the trend sniper to give us data. And then we'll just hop in, just to make it fast, into a market order short. And it looks like we're starting to get it. So let's go for it. We're going to confirm it. There it is. And I'm prepared to deal with some, a bounce. because this is a support. However, when I see the trend sniper data working in my favor, and I see, I'm going to leave this buy bit chart up. So just know that I'm looking at the trend sniper data. So when I see blue breakout bars in enough places, and I see the trend sniper data working in my favor, and maybe I have my 4-box just for the purposes of identifying a micro entry. When I see my 4-box layout transitioning bearish or being bearish, being in the bearish zone, being in the bearish transition zone, popping off signals, pending bearish. These are the things I look for in conjunction with a lot of what we just discussed to identify high propensity for a bearish breakdown, right? And so now here we go. Again, this is with $1,000. $1,000 means a lot of different things to different people. What I'm here to talk about and to convey is the potential for capital multiplication and how to do it more safely, right? I think that this will be another degree, another layer of evidence that what we do is real. Doing it right in front of you. I cannot get any more granular than to record a video right in front of you where money is just doing what it does, price action's just doing what it does, and I'm either a charlatan or my analysis is just good. And so I wanted to build something that takes people through what it looks like to use sophisticated data and a well thought out strategy. Now notice I don't have a stop loss, right? I am the stop loss, and I'm okay with that. This is a low enough, I would say, position size. This is a low enough leverage such that I'm okay being the stop loss. Not everybody's going to be there, right? And that's okay. This could retrace. I could be negative, you know, for a minute. I have to have conviction in my trade, right? So just to narrate what I'm looking at, I see cyan breakout bar in the 10-minute. I see a dark blue breakout bar in the 24-minute. I'm looking at the 2-hour. The 2-hour is blue on blue under red, right? These are time frames that matter. I am looking at the 4-hour. The 4-hour is blue with a red movement monitor, so it's not quite blue yet, has yet to turn. It's kind of figuring itself out. Obviously down pressure is prevalent, and I'm looking at a red volatility cloud there. So what's happening in my own mind is a lot of the world is just kind of figuring out that Bitcoin is probably going to have a push to the downside. That's the way I kind of look at it. Now, if I wanted to get, you know, again, granular on what's going on, I could just come over here and kind of show you live what the trend sniper is doing, right? The trend sniper is right here. And so once you successfully enter, you can start to utilize the trend sniper in if you're really concerned, in really, really small time frames, right? Like one of my favorite is the 30-second. If I'm really in a high leverage trade, money means a lot to me. You know, I want to be careful, whatever. I want to take profits at the right exact moment in time. I don't even have to really look at what's going on with anything else, because all I have to really look for, I mean, I don't even know what's going on in the Bybit chart, right? I literally covered it up. I have a area of my screen that I'm recording, and I just dragged this chart over it, and I placed it over it, right? And so all I really need to know if my trade is even in the 30-second time frame beginning to go against me, is I need to see this start to transition, right? So even though this was bullish for a second, it stayed in the bearish zone. When you would kind of want to consider, and again, this is just the 30-second time frame, but when you'd kind of want to consider what you should do to take profits or whatever, if you're concerned about it, would be if this started to say bullish transition zone. And then this over here would say previous candle bearish, right? Like it is now. And we may see that, right? We may see this up pressure bring us back. We'll have to kind of look and decide and evaluate. But I see, a lot of blue. I saw a lot of blue. And so I think a lot of people would be looking for the retrace and then looking to enter shorts. Again, these are kind of like the Johnny come latelys to price action. And if you're a leveraged player, if you're playing and it's a leveraged situation, you want to be cautious to not be late to moves. You want to pay probably more attention to your Bybit screen than I currently am. But I'm able to do this because I'm really paying more attention to a really, really sensitive analysis of trend in the smallest time frame that's relevant, to me, based on my leverage, based on the capital, based on what I have going on with you guys. So current trend, we're back to pending bearish. We're safely in the bearish zone, trend-wise. Now, that doesn't mean, that volatility is not going to be present. You see the price action doing what it's doing on all these other time frames. But these other time frames, if you're in a short, should give you solace, right? Now, whether we get expansion or not is always a different story. But when I see deep blue in this many places, that's pretty cool. It takes a lot for something like the 12-hour to really display bullish propensity, right? It takes more maybe than what's going on now. So I can kind of go back and look at the 6-hour and I could say, well, do I at least have a lot of nice confluence, in a lot of these time frames that are relevant to my trade, right? To my 15x leverage trade based on my entry and so forth and so on. And then again, depending on how concerned I am about getting out at the first moment of potential reversal in the tiniest of time frames, right? Now you could go smaller, but if you go too small, they become irrelevant, right? Because if the 5-second trend like goes bullish, it's probably not going to matter, right? Like how long is that going to last? 25 seconds. So you want to use, a time frame that could be cause for a sustainable reversal to the upside, right? And in my experience, like 30-second all the way up to like 3 minutes is where on this asset and numerous others where significant reversals kind of like take place. So I want to share that with you. Okay, so we've kind of like been exploring, why this makes sense, why I do these things, what to look for, utilizing the DIIO algorithms on these time frames. I could also kind of go into just sharing that this could easily, retrace up, and it probably will. This sport needs to take a lot of money from a lot of different people. Now, if we expect a breakdown, because we're looking at time frames like this, and we see how overall bearish they have the propensity to be, then we have to acknowledge maybe moments of up pressure, and that they might not be sustainable, right? Because we still see this trend. Again, this will turn orange and it'll say transition zone when you're in danger and when you need to like flip back to that Bybit screen, maybe, right? And think about taking profits. And even then, you might ask yourself, based on what I see in all these other time frames, do I really need to pay that much attention to the 30-second? Maybe I should go look at the 1 minute, the 2 minute, right? So I'm just going to use that as an example. The 2 minute, just for example, is clearly bearish, right? In the trend sniper only, clearly bearish. Let's take a look at the 5 minute. Do I feel safer with 5 minute data, right? We're gonna allow it to do its thing. So 5 minute data says, well, it's kind of like rearing up its head of bullish, but overall bearish zone, pending bearish candle, bearish zone. And then I would kind of look, well, how much time do I have for this to actually close that way? I have 2 minutes and 20 seconds, right? And so I have to kind of take those things into consideration. So I can look at all of that, and I wanted to film a relatively short video that just kind of shows entry a bit more detailed than maybe what I've put out before, and that maybe gives MSA members an idea of how to do it, right? And so I did this at $1,000, which creates a position value of 12,788. Apparently, it filled me with not exactly 1,000 because I have a negative realized P&L, right, of about $7. But it filled me, and it gave me a position size of 12,788. So the exchange says, okay, we'll take your $991 and we will let you play this game with 13x. All right. I'm gonna have to move this. See if I can move this. There it is. Okay. So, and it's saying we'll let you play this game with 13x leverage. So it takes my 991 and then it multiplies it, give or take, to the tune of 13x intensity. I can't emphasize enough, if I'm wrong, that this would grow to the negative just as fast as it's growing to the positive in this scenario. Like we got lucky, right? We happen to be right. So in this scenario, that's it, right? That it kind of gives you an idea of what to look for. Let's put my face there. It keeps getting in my way. So now you can see my entry price. You can see the value is almost 13,000. I was able to play at the level of a player with $13,000 in Bitcoin with only $991. So that's pretty cool. And then you can kind of see my entry, right? And so whether this is wrong or right, this is what I wanted to show so people have an idea of just how cool that Trend Sniper data is and how much easier I think it makes life to play with data and how comfortable you can be. And so I want to kind of throw out a couple things, right? I showed you a market order. So while we're in this video, I want to show you trailing stop and stop. So I can take a look at my data over here, and I can say, let's go back. I'm going to show you guys everything in this video. Let's go back and let's say I'm just looking at I think a relatively conservative target, right? Some people would make the target the pressure line, right? Geez, where is the pressure line? Whoa, it's way down there. The next 2-week pressure line is 54. This could be a beautiful entry that leads me to, massive percentage, right? Because if I was right, I'm not saying I'm right, but if I was right, and somehow this broke down and I caught the move all the way to 54.5, I do want to prove a point, right? Let's prove a point here. That's just kind of fun. Let's just say I catch the move to 56 with $1,000. It's kind of cool that my $1,000 would turn into 1588, right? 161% profit. So that's just kind of neat. If I look at something more shorter term, then I might look at I don't know. I think these channels they're kind of breaking down. I think that they'll break a bit harder. I think that one of the new algo supplements that I'll probably work on putting out within the next 60 days will be equivalent to breakout bars in that it will let you know when we're kind of deviating from Bollinger Bands in a way that is at least conducive to a larger move, whether it's a breakout to the upside or a breakout to the downside. Like, it'll help us in MSAs catch these moves, much like the one that we're in right now, right? We caught a moment of nice movement. So with that being said, to be honest, I think that this 4-hour channel is obviously also being broken. So I might say, well, it could be something as, I would say maybe again, I could use different methods to find a target, but I'd say like 60,789 is probably like a relatively conservative target. So if I wanted to go there, I would go 60,789. And I could see like, okay, that's how I would make 630 bucks. Is that right? Yeah, based on the 4 hour time frame. Um, I would probably look at the 4 hour time frame chart. And over the course of, a little bit of time, let's just say 60,500. Um, or we'll even say 61. That would be my 580 simply utilizing $1,000, right? So I could confirm it there. And then I could protect my play with my stop, and I could say, okay, just using nothing but asymmetry, right? I want to use logic, but just using nothing but asymmetry, 580, 22, 2 relative to almost 60, right? That's like a 30 to 1. I don't know that, we would want to do that, but we can see where the entry was. And so I can literally say, you know what, okay, if I'm gonna set this and forget it, I'm gonna walk away. I don't even want to look at charts today. I'm either gonna make 600 bucks or I'm gonna lose 30. I could do something like this. And then as you can see, it sets my stop loss for me up here. I mean, it's above my entry, and it's got me protected way up there. My entry is here. My stop loss is now here. If I lose 30 something bucks. If I succeed, I make 600 bucks, right? And this is not a big trade, right? I mean, for some people, maybe it is. Like, I don't know how many people feel about putting $1,000 into this space. I just know that when you have great data, it makes it a lot easier to put 1,000, 5,000, 10,000. And as long as you're comfortable with your own risk reward and your own knowledge and the data and all that stuff, then you get to decide. You get to decide how much it, really affects you emotionally to have, your position $1,000 in the red because your target ROI is, 10,000, 12,000. In the case of, a 25 risk reward ratio, your target ROI is 25,000, right? That's insane, but that's what we're doing here when we're at our best, right? When the DIO strategy is working at its best. So again, very palatable number for most people, 991. Just fun to show you guys in real time, how quickly the numbers can move. This is on a 15x leverage. I was looking for a bit of a breakout play because I wanted to show people the certainty that I can create behind the things that I do and why it works. I feel like this is more powerful than your average, screenshot saying, look at my ROI. This shows you the why, the how, the data, a little bit of everything, the psychology, right? Fortunately, in this cool little exhibition, I did not have to go much into the red. Sometimes I do, right? And you have to decide how you feel about that sort of thing and where your conviction is. So I was actually looking for a move up there, but I noticed things were moving. And so you guys literally saw in real time what my plan was, right? So as it stands, I've created an 8 to 1 risk reward ratio success, right? Relative to where my entry was, where, I guess my thesis wouldn't really be invalidated. I'd be willing to go into the red quite a bit more than that. But at least you can kind of see like how it all came together. Just like how good is this data? How realistic is this? I feel like explaining it in real time is the best way to show it, right? So if I had a $9,910 position, then my capital would already be at $1,350 in gain. I can set multiple trades just like that any given day, right? So it's a pretty cool gift to be able to do something that will make you $1,000 a day or multiple $1,000s a day, $5,000 a day, if and when you are good at it, if and when you master your own emotions, if and when you get comfortable with the data and you know what's going on and you stop guessing and, all those things, right? There's multiple talking points that I created in some of the videos I put out recently that have to do with a lot of the things that lead up to this, right? Psychology of money, relationship with money, velocity of money, consciousness around money, the data, how to interpret the data, going through and actually internalizing the concepts in the 25 or 30, going on probably 30 hours of DIIO content, right? Like learning where it came from. Why does this work? All these things. And the cool thing is, unlike a lot of traders, I got to do this fairly quickly because I have, data that just tells me what's going on. And I have breakout bars and I have all these things. And if and when this starts to reverse on me in a meaningful time frame, and meaningful is like so arbitrary, but like let's just say I don't want to lose my 120 bucks because that means a lot to me. I might look at the 30-second trend sniper that I've kind of shared with you guys. And I might say, you know what, I do not want to risk losing what I have. And then I would, literally just go in and do a market sell over here when that trend sniper data tells me to do so, right? So right now, just looking at the data, I think we're actually in a bit of a push to the downside. So I'm not going to mess with it. I'm going to keep narrating and keep teaching while we're doing this. I just have a few more concepts that I want to cover. One was just catching the entry. I kind of no longer care about this money or this trade or what happens. I do think it'll keep going down, so it'll be fun to watch. But I'll let you guys know. Just know that I don't care about the money. I care about just proving points on the data. So I'll let you guys know if and when the 30-second trend starts to flip. And if and when the 30-second trend starts to flip, you will know. And then we can watch what happens with price right here. But otherwise, just don't worry about my bank account. I'm not worried about whether this $150 goes back to zero or whatever. I'm worried about sharing the fact that the data works and the strategy works, the tools work, and you can either believe that this was just another accident or a coincidence or whatever, or you can believe that I've got something pretty special going on, as do all MSA members. And so that's kind of what's more important to me, right? So I'm over here I'm going to be monitoring the 30-second trend sniper so I can let you guys know when it's crossing, right? And then you'll notice that my position will start to retrace significantly. If and when it doesn't cross, then I won't say anything and you'll just see it continue to fall. And that means my unrealized profit will continue to rise. So while I've got you here, we did touch on stop loss. We touched on take profit, right? So I could literally walk away from this trade. And for the most part, outside of extreme market movements, I'm going to be able to comfortably walk away with this little thing is always in my way. I'm going to be able to comfortably walk away with a $32 loss, right? So my 991 kind of feels at risk, but in reality, it'd probably be about a $32 loss, maybe up to a $40 loss, something like that, right? If we account for slippage, right? Slippage is just inefficiency in the market. But the benefit of a market order is it allows you to get out of your whole position, where a limit order, when used as a stop loss, may say we couldn't sell all of your Bitcoin at the price that you wanted to sell it at, so we kept some. That's what you told us to do. So kind of keep that in mind, right? We did touch on that, and now trailing stop. I'll touch on that again. My favorite retracement by rate, right? It's the ones that just make sense in my mind better. So I can actually say when Bitcoin, whatever it does, when it retraces 1.1%, that's when I want you to get me out. So here's the trigger, and I want to have a live video of how the trailing stop works. And these are all over YouTube. I mean, you can YouTube trailing stop, but to see it from me for the people that are actually paying attention to what I'm doing, I think it's useful, to see what it looks like in real time, specifically on the Bybit exchange in a real trade that I kind of narrated from beginning to end, right? So again, I could have easily put 10 grand into this trade, and I could literally have had $1,700 right now. That's how easy it is when you're able to utilize great data along with a strategy that works. I think there is a lot of education behind it. I don't want to minimize the fact that you not only have to go through the 25 hours and then get some experience and have some actual, practical application and make some mistakes and fail and lose some money and like feel those emotions of fear and panic and like what does a negative, whatever, take your pick on the number that matters to you. What does it feel like to have a negative $700 if you're, playing with position sizes that you're looking for a $6,000 gain, right? What does it feel like to be upside down $700 on your way to your $7,000 gain, right? We're looking at 10-to-1 asymmetry there. If you're playing with smaller position sizes, what does it feel like to be upside down $100 because you're trying to make 1,000, right? Like, if you can't handle the pressure of that small negative, right, that 10% negative on a position on your way to 10 times what the loss would or could be, then you're playing too large of positions, right? So if we get perspective on where my target take profit actually is, it's down there, and by the time I expand my risk reward ratio to show you guys like just how unreasonable it is, it's 39-to-1. This is pet rock fugazi land. I shouldn't be able to do this. It's fake. Technical analysis is fake. This shouldn't work. I'm destined to fail if I do this long enough. I don't know. I'm just here to kind of build a video to show you once again. I've done a couple this week. That there are a lot of very believable people and reputable people and successful people that say I can't do what I'm doing, and yet I'm just here to record it in real life, in real time, with an explainer, with visuals of the algos, with visuals of the data to show you that I can do it, right? And if you do the math on $500, let's just do some fun math, right? I only have $1,000, but I get good at this, right? And I take my $500 and I take my $1,000 and let's just say like somehow I managed to find a nice setup where I accomplish this on a daily basis, right? My average, right? Maybe I lose too, but if my average is a $500 success over the course of whatever, inclusive of my $36 failures here and there, let's just say I average $500 a day. That's 500 times 5 times 4. That in itself is $10,000 a month, and a lot of people, I think, could stand to live on an extra $10,000 a month. Because the other thing is, this does not consume all of my time. Want everybody to know I'm still paying attention to the 30-second trend sniper, right? So as of now, we're still bearish zone. We're bullish live trend, but bearish zone. It says previous candle was bearish. So we're kind of like in danger of a transition or moving into the transition zone, but overall, by no means are we there. And as I look at other data points, I still see cyan on the 2-hour. I still see deep blue on the 4-hour. We have plenty of room for expansion. Let's see, the 30. This is kind of cool because you guys are getting to see it. The 30-second is probably showing some of this. I see some orange on the 30-second. Isn't that cute? That's where it starts though. Sometimes I say that's cute, and then it starts to move against me. And if I see that transition zone and I'm in a sensitive position where I really care and the money is significant to me, then that's where I would exit. So if that happens, I'm going to draw a line at where I would get out. Now let me. Okay, so I time-lapsed that kind of accidentally. I'm not sure where I had left off, but this move, I just noticed the clock wasn't moving. So I'm going to go through some of the things that I'm not sure if we hit or not. I apologize. Man, I did not see that clock not moving, and I had a lot of good content. But as you can see, I guess we'll try to summarize it. The move worked out well. Even in the 30-second time frame, which I know sounds degen, but with this data, I promise it's not. It never made it past being in the basically bullish zone and bullish zone, and it never quite got the full signal, right? I don't know if this part showed up, but it just said no signal. And so until you have all three green, you really haven't gotten your exit signal, right? Probably could say the same thing about entry signal. As you can see, the move overall is looking pretty good. You can see, based on where we're at right now, blue, that's the 30-second. I don't know why I have that there, so I'm not going to mess with it. But you can see blue in a meaningful time frame relative to this trade. You can see the 6 hour. One could argue, what if it lands there? Should I take profits? Maybe. Depends on how fearful and greedy you are. Or it could go all the way here, which is what we talked about in the video segment that I may not have actually caught. We will figure that out. And so I'm just kind of watching, channels. I'm looking for deviation in any one of these channels that might matter. But right now, even the what I'm going to call the nano channels are doing just fine. I touched on, just how to use take profit, how to use stop loss. I touched on where, you can just literally look at this data, and even if you hadn't measured your asymmetry with a calculator, you could look at the numbers and just say 60 and 2. With simple division, I can simply say it's about a 30-to-1 risk-reward ratio. Partial position, I didn't touch on in the video that didn't get recorded, but this allows you to take partial position. So if I want to take 50% at a certain number, I could. And then what it'll do is it'll just allow me to, to take partial positions, which is great. I could also set a limit order for that, right? We touched on limit order. This is if you want to get out only at a specific price. If you can't get out at that price or better, then it will not sell that part of your balance. It'll say, sorry, we did not sell that part of your balance. In the market order case, again, it shows you just this is what you'd make if you sold it all right now instantly, and you have to be cautious that there's slippage, right? So you've got these things. Okay, so here we go, guys. This is the moment I wanted to show you, right? So let's mark it. You see where Bitcoin is? 63,278. 63,278. Pending bullish. Bullish transition zone, bullish. 63,278. So for a person who's concerned about money, that is where they would really heavily consider taking some of their money off the table. I'm not, for the purposes of this demo, I'm really not worried about the money. I'm more worried about just explaining logic, right? So, but I want to mark it because this little thing is freaking pretty amazing. And when I see that zone change, it keeps going, And so this position could go down. Like I said, I'm not worried about the money, and I want to emphasize that, make it really clear. Yes, Brayson was making this video and he could have gotten out, but it's the 30-second. And then secondly, I think overall negligible funds relative to my more important mission statement of showing people how this works. Okay, so we talked about, the fact that this is allowing me to, trade with 13 times the normal power of my capital. Instead of the exchange treating me like a person that has $991, it's generously letting me work like a person with $12,788. It's not doing that to be nice. It's doing that because it thinks it'll take my money. And in the case of a lot of traders, it does. So just kind of, be cautious of that. I marked where the 30-second went off. I want to, just while I'm touching on that, I want to mention that meanwhile, if I look at just one time frame larger, the 1 minute, which if I were in a real trade that I really cared about, I would really be watching. The 1 minute actually looks still, relatively bearish, right? Bearish zone, pending bearish zone. So it all depends on how sensitive you want to be. How big of a deal is it for you to deal with volatility? How big of a deal is it when you lose, when you experience retrace, when you had 30% and then you go back to only being up 20%, right? Like that's all up to the individual and their psychology of money. Next, I think we touched on all this probably at least once. This is the reverse button. This is also the reverse button. Every time I touch that button, I feel like at a minimum, even if I'm right, it charges me more money than just closing out my position and just entering a new one. So I no longer use the reverse position button. I just think it's inefficient when it comes to fees or slippage or whatever it is. It always seems to, I think, take a little bit extra from me. So I just literally market close my position just like this, click the button, confirm, and I'm done. Or whatever. I guess my stop loss could go off. We talked about asymmetry in the last video. My real asymmetry at present, at this exact moment in time, is still 8. It's a super awesome trade if I ever saw one by most people's standards, and it truly made it there. So whether this was a coincidence and an accident or whether it's real, it made it there. I don't think in this trade I ever really had much at risk, but I was willing to risk, something like probably, what is it? I was probably willing to risk more, $30 or something, but that's up to the individual. And then my target asymmetry, which has not been realized, we'll call this unrealized asymmetry, would be 4.2% organic, which again, when you magnify that by 13x, it's really 59% target ROI. And then my risk reward ratio target is approximately 25, right? 25 is where I'm at. Again, just a little snapshot. What am I looking at? Why do I feel comfortable? Because I have so much red and all these things. If you watch the 2-hour Confluence Monitor video, you'll know why, all these things, what all these things mean to some degree. And at the same time, I'm mostly just looking at the trend sniper in these little tiny time frames to really point out potential true reversals. Anything else, for me, I just consider volatility, right? So again, power in data. Okay, and then back to the Bybit tutorial that I'm making a part of this video. This allows you to just, based on your equity balance and your available balance, quickly, I want to trade with 10% of my balance. I want to trade with 25% of my balance. I want to trade with all of my balance, right? So you get to choose that. You can put what you want in here. You can order by cost, by value, or by quantity. I like to order by cost. It just lets me know how much US dollars I'm putting into a position. Makes it really easy for me. And that's what that does. We talk about take profit and stop loss, setting it before your order, right? So that's something you can do. Everything stays the same. I don't know, again, forgive me if I'm repeating myself. I don't know if this got caught or not. Equity tells you all of the money you have, inclusive of your current ongoing trades. Available balance shows you what you have to still enter trades with, right? So this may be a lot smaller than the total amount you have in your account, and it's because maybe you're in 3 trades and you cannot use that money until you close out those trades, right? So another interesting thing I can do if I feel safe, and let's say I protect this money with a stop loss, I can increase my available balance by increasing the leverage on this trade, right? It won't show it, but I can basically free up a significant amount of my balance. But you do, in my opinion, want to have a stop loss on that that's really safe and comfortable, because now you're literally borrowing against your unrealized profits essentially. So you want to have that 100% protected. It's 100% for more advanced users. I just about don't recommend it. And if you even start to play with it, I would only recommend toying with it, with small numbers, so you can find out what it works like. And only when you are comfortable of your own accord and of your own volition, would I recommend doing it with a larger position size. Limit order. This is the opposite of what I did when I started this trade. I started it with a market order, which basically just says, I feel like a breakout's coming, get me in, right? Even if I start out in the negative, like just get me in, I want my position. Only if you feel like a breakout's coming should you use a market order. Most people lose with market orders. You have to just be good at identifying momentum and breakout propensity. And that's, again, what the breakout bars do, movement monitors, volatility clouds, and the new supplemental algo that I'm going to add will help with that, right? again, statistics, probability, not to be confused with certainty. But most people play this game with no statistics, no probabilities, no optics, and no education. And that's why we have a 90 whatever percent failure rate at trading of all kinds, right? Whether it's options in your Charles Schwab account, or whether it's trading on some crazy exchange, crypto, 15x leverage Bitcoin, doesn't matter. That's why traders lose. It's a very difficult game, and it has very, very minimal barriers to entry, right? So anybody can do it. Not anybody can be great at it, or call their shots, or be consistently profitable with an 80% win rate, or whatever, all these things. It is much more difficult to be consistently successful with higher leverage. It is much easier to be successful with lower leverage, right? So lower leverage, still high for a lot of people. Money's moving at 4.8x the typical velocity, and Bitcoin's already volatile. And at this rate, I entered a trade where my money's going to move at 13x typical velocity for Bitcoin. So if Bitcoin moves 1%, my position moves 13%, even when I'm wrong, right? So you have to be really, I think, understanding of the level of education you have and the level that you're playing at before you entertain high leverage. You don't have to be. You could just play it either way, but be prepared to lose a lot of money. See my zones, right? My zone of responsibility for good traders with good data, tuition zone, donation zone, right? Up to 10x, up to 25x, and then 25x plus is the donation zone for most traders. Okay, so while we're continuing the learning process, limit order, this just says I want my position to get filled at this price and this price only. If it wicks there and I only get 60% of my position filled, that's fine. That's what I told you to do. I did not want to pay a price worse than this number, right? For whether it's a short or a long. We talked about order and how you can do it by cost, by whatever, by value, by Bitcoin. That was a little more confusing to me. And so when I used to do that, I used to really just rely heavily on, looking at value and that sort of thing, right? So if I was going to do that, I would have to pay really close attention to my cost, right? So let's look at a different one. Let's look at, and here's the crazy thing. I could be over here trading, Ethereum while I have that Bitcoin, move going. Right, and it doesn't really take much for me to just do the same thing on Ethereum, and I have a stop loss on Bitcoin. I could even have a more aggressive stop loss on Bitcoin. So Bitcoin's expanding. Meanwhile, I jump into something similar on an Ethereum trade or a Phantom trade or any other setup I find, and then there we are. So let's say I want to order by quantity, right? I think this is as denominated by ETH. So this is where it's kind of confusing, and you're like, dude, I don't know how much ETH I want to do. What's kind of nice about this is I can say I want to do, however much ETH. Maybe I don't really understand the fractions of ETH, and so, or Phantom or whatever it is. So you put that quantity in there. You can use any of these little buttons, to find your quantity, and at least you have an idea of okay, if I click this 10%, it's going to put 10% of the money that I have in this account in here. And so in that scenario, okay, let's just say it's 0.25. And so what's kind of nice for those people that are like, I had a 30% win and I won $20, like if something's wrong, I thought I was going to win a lot more, whatever the case is. Keep in mind that this is the easiest place to go and look at the trade you're about to make. So if I actually was to accidentally, inadvertently order a 0.25 Ethereum trade, I have to acknowledge that with the current leverage that I have, I would be looking at an $83 position, right? So maybe I meant to have more. And so now I go, well, what about 2? Okay, 2. 670 is, what I was actually basing my numbers off of. So let's kind of see what ETH is doing real quick. like I said, don't really care about the other position. I was kind of proving some points. Um, Maybe I'll prove some more points. But let's just see what ETH is doing. What does ETH have going on? And see if, anything might be possible with ETH. And then maybe I'll have a nice example of a low leverage trade, right? Because we can do things and probably be a little bit safer with low leverage. All right, so ETH is in it's kind of like retracing in its trend, but I think it's kind of in the same boat. So I may say, like, I want to have, I'm just going to pick a number, right? I want to have a $334 position on ETH, but I don't want to like be risky. I want to be one of these people that, I just want to risk like a little. I'm pretty confident in the direction. And so I'm just gonna go ahead and do a market order, right? I don't recommend this for people, but I'm just gonna go ahead and do a market order. I want it right now. Like I'm pretty comfortable. Whatever happens, I'm willing to hold, for the short term. Actually, in fact, I'm gonna go with a long, just temporarily. Right. So I'm gonna go with the long. And oh shoot, I did a 10x. Okay, so that's fine, whatever. Went with the 10x, right? I'll try to protect my position a little more because now I have, I was intending to have a third of the size, but I have a $3,300 ETH position. I actually only intended to have a $1,100 ETH position. So my velocity of money will be a bit greater, right? And that's fine. I do expect ETH to maybe encounter up pressure. If it doesn't, I'll just bail out before I lose 20 bucks or something. But it's nothing too crazy. And maybe I could even show you guys the reverse button because I don't think it'll lose that much money. It's just when you have larger position sizes or extreme volatility, you can. So right now, we're still very much in a bear trend. So I would probably normally go for the short, but for the purposes of like just quick numbers on the screen, we'll see what I'm gonna do. Yeah, I'm at negative $5. I think I'm gonna flip it. So let's this is what I do, guys. Let's flip it, right? $7 in the red. Let's go back, right? So you may see me lose money here. I don't know, but it's negligible. So I flipped it. I do think that the bigger picture direction will probably be more down. So let's kind of play with just what it looks like to have two trades open, right? So my ETH trade, I think I entered a long at 10x accidentally. I flipped it. It basically took my $7, right? Probably my loss. I probably absorbed my loss, and then it reversed my position. So it took my loss, reversed my position. If I'm looking at ETH, oh gosh, I was looking at the wrong chart. If I'm looking at ETH, let's see what's going on with ETH. ETH actually has some yellow in really tiny time frames. So I'm not expecting to have like a huge loss out of ETH, but it's cool. If you guys get to see, how quickly it moves against me, then you get to see that. I think that we have, we're a bit overextended for a short, and maybe a long was the way to go. But I was looking at the Bitcoin chart when I did it. So in either case, you kind of see like what the market order looked like. You saw what it was like for me to enter based off of cost. And now if I look at Bitcoin, Bitcoin has entered the full bull trend for specifically for the 30-second, right? But again, I'm not too worried about that. So we'll see what happens because again, the bigger picture trend is definitely downward. And so I'll only let that ETH position, I guess, go so much. But I'm really watching Bitcoin so that I can know what to do with ETH. Isn't that funny? That's often the case. I trade a lot of, really sensitive assets, and I'm oftentimes noticing that that's what I'm doing. So right now we have to be cautious because the 30-second trend has flipped. Just to be really transparent, it began trending kind of like right where we're at, like not too far away from where we're at. So if I were to plot, where it began to trend, it was like right about, here. And then I would probably like decrease all of that, right? So that's kind of like where the 30 seconds said, hey, you're in danger. Now so where did I have that chart? I'm just going to refresh this because my Confluence monitor went away. But now my other chart, my ETH chart, let's see if I can pull it up. And I want to show you guys what I'd be looking at, with ETH, just for what it's worth. And why, we could see some negative, but why, the bigger trend is what it is. I'm just going to show you. And I've kind of, I think, already prepared you a bit, but maybe it's taken a second to load up my Confluence monitor. That's okay. I'll pull it up either way, right? So because you can at least see the trends, right? That I'm not just making things up. So what I'm looking at here is, this is a big trend, right? 16, I'm sorry, that's the 1 minute. Still kind of interesting to know where it's at on the 1 minute. I usually like to have my 5 here, and so I can see where I'm at. We're at the bottom of a 5, so we could see a bounce. This lets you kind of see where we're at with the, I don't know how I got that to be too big, but this kind of shows you, where we're at with the 30-second, right? 30-second and 1 minute and 2 minute, normally I wouldn't look at those, but if I'm in a heavy, margin trade normally, then it is nice to know that 200 frames, 200 candles have created these channels. So it kind of lets you know where you're at in a trend. And I like to enter in, if I'm entering shorts, I like to enter into standard deviation zone 2 or 3, right? Standard deviation zone 2 or 3, with all other conditions conducive to my short. So that's kind of what I'm looking at. And as you can see, in a really, really tiny time frame, perfect entry on ETH would be like right here, right? So if ETH were to go right there, that would be a nice ideal entry. Now that would be 33.26, and again, that's the 30 minute. You might look at a different time frame, like the 1 minute or 2 minute. Again, this is just for entry only when all other time frames are doing what you want them to do, like this 4 hour being deep blue, this 6 hour being deep blue. The more blue movement monitors I see in much larger time frames, right? Those things matter. I want the 24 minute, let's just say here. And so, yeah, blue movement monitor. I love the blue breakout bar Confluence that we see in a lot of places. But otherwise, I would say if I'm convinced of a short, then I like to enter up here. In one of these smaller time frames, I'm just only using them for the purpose of entry. I like to enter just below a volatility cloud, right? This is just the 4 minute, but it gives you an idea of, what's a more intelligent entry and less of a FOMO entry right here, right? So what I did could be, in a funny little micro time scale, construed as a FOMO entry. But I think I also was looking at one of the Bitcoin channels, and I said, this is actually probably a place where we could, because the momentum to the downside is very strong, I think it's where we actually could see already our reversal. I don't know how much how much faith do you really want to put into going against the major trend, right? Going against all those blue breakout bars and all those other time frames. I was like, not that much, and that's why I reversed my position. Always be prepared to be wrong. Always be prepared to live with your downside. But I think that's helpful, right? So here we are. Again, you could I don't know, you could just see like what it's like. And because I didn't want to do as much investigation, my original plan was to have low leverage on that trade. And you can see how low leverage moves, right? I mean, low leverage actually can still move fast for most people. There's people out there in the world that work for $8 an hour, and so when you're seeing things move, $60 in 60 seconds, it's really fast, and that is only with a $1,100 position. That is only with a value of 3309, right? Like that's not. I think that's kind of relatively, potentially pretty fast velocity of money for a lot of people. And so again, that position is valued a lot less. So the numbers are going to move a lot faster here, even though the position is smaller. Percentages and absolute value are going to move faster there, and they're going to move more slowly here, even though this one is about $120 more position margin, right? The wager I'm making is only at 3x that leverage. This one's at 13x the leverage. So the person that has this trade going has to have a psychology of velocity of money that is able to handle it. And somebody who's newer to the game might do something like this, where whether it goes for them or against them, they're not going to be too worried. It won't stress them out too quickly, and they won't, burn themselves out too quickly. And that's why we have the leverage belt levels that we have. Okay, so now we've talked about ordering, quantity, limit. Now we've got conditional. Usually, to be honest, I use conditional on, three commas a lot. But with conditional, let's look at a different one, right? We'll look at AVAX. Maybe we'll look at AVAX. Bitcoin, a lot of blue. Okay, I'm going to take my eyes off the Bitcoin chart for a bit. Overall, like I said, negligible. And when I say negligible, I mean these are funds that if I lost every penny, I would not get wrecked. If we, by saying that, I don't even mean lose my position margin. I just mean if my $196 went away, if my $8 went away, it would not be that big of a deal. So I'm going to look at, finally my ETH chart came up. So let's see where we're at with ETH real quick, guys. Like, why are we doing what we're doing with ETH? You want to make sure everything's working. Let's make this less busy. Let's get my face out of the way, put it in one of these time frames that's just purely blue. We don't care. We can see over here on the 6 hour, we have 3 more hours to make it to as low as 31.95. We could see here on the 4 hour where we're potentially at a support. And we could argue that, this channel has a support. This channel so far has been overall respected. So we could see a bounce there. We just have to look at the possibilities from any given perspective. But overall, these make me feel good. And the fact that we have no pressure lines all the way until 3032 make me feel good. And the fact that this is the 5-minute chart and we are seeing full bearish zone, bearish zone, pending bearish, all make me feel pretty good. If I really wanted to be, that cautious person, I could go as low as the 1-minute chart and make sure that I have bearish confluence there as well in the trend sniper specifically. I do. Oh, no, I don't. All right, so we have to be cautious, right? But overall, bearish zone. Previous candle was bearish. So there's really no sign of transition at all yet, but we want to know that, that's there, right? Like this candle doesn't currently have a bearish signal. And it always feels a little safer to have bearish zone, bearish zone, current candle, pending bearish. That's the best place to be. Now we see orange developing on Ethereum, right? So this would be a place where, we would kind of go and kind of ask ourselves some of those questions, what we really want to do. And notice my position is negative 0.33%, right? So again, it just depends on your relationship with money. I think bigger picture, Ethereum's looking pretty bearish, but could we see some retrace? Yes. And only you can determine, how painful negative $5 is to you, how painful negative $500 is to you, or how painful negative, $5,000 is to you. I'm not really here to like try to give people, insights on their own psychology of money, but I think it's just something cool that we all have to acknowledge is real. So as I look at ETH, I feel good. I'm gonna let it run. Let's mess with conditional, and we'll do AVAX as our example play. Okay, so now I'm pulling up the AVAX chart. Let's see what's going on with AVAX. All right. So, we made 10 bucks on ETH, guys. We're doing great. You know what? Let me pull that back. I see my breakout bars not working on. That's fine. You know what? I don't even care. Okay. I'm just going to pull it back. Okay. So some of these algos are not working. And all you do is refresh them, right? But these little exclamation points usually are signs that there's at least one algo not working. And so all you generally have to do is click one that is working and then, reconfigure. So with AVAX, again, this is just my own personal setup here that I like to have. I might look at the 5-minute time frame. I feel like, unfortunately, AVAX is, well, I don't know, it could work to our benefit, right? AVAX has a pressure line. And so I'll show you kind of like a use case for something like this, right? So AVAX has a pressure line right here. Right here, right? We can see it on all these charts. So it has a pressure line right there. I would take this data, I'd make sure I'm looking at the right chart, right, which is Bybit perpetuals. And then I'd say, okay, AVAX pressure line just approximately 53,105. Cool. I'm going to go to AVAX over here, and then I'm just going to plot it because I want to be able to see it. 53, what did I say, 105? Perfect. There it is. Just for my own purposes, my eyes, what's comfortable for me. I want to make it a little more obvious. Cool. There it is. I would say, my thesis would kind of be like, if it breaches that line, I'm bearish, right? And then I see, this is small, right? Let's go to something larger. The 1 hour, right? So maybe that's a pressure line, a DIIO pressure line. So maybe I say, I'm going to draw this out for you guys, so hopefully it makes more sense. I believe that if it goes this low, I think that it could go lower, right? If it deviates from, this, whatever, intraday low, right? Because this was 2 days ago over here, right? So it was different 2 days ago, but for about 2 days now, 7 o'clock on March 20th, 2024, it hadn't gone below that point, and it tested it twice, right? So I'm just using like some just common sense logic that somebody, even other traders across the world, might agree with. So maybe I believe that I want to set up an automatic trade, right? So I look at this number that's just below this low, and I go, okay, so about 50. Real deviation is just literally right about 52,610. So if AVAX gets to 52,610, then I want to order some AVAX. However, I don't want to pay 52,610 for it because I believe that's the FOMO price. In actuality, I want to. I always get confused on these. It's like kind of like trading view, but not quite. Okay, so in reality, if it hits there, then I want to, and I could look at a market order and a momentum trade on this too, I can already tell you, but like that time is almost coming. I could literally prove to you in real time again that the trend snipers are pretty awesome. But I won't. I will instead discuss conditional order. So I believe that if it gets to 52,610, that what would happen is I'd probably get the retrace to the pressure line, and that's where I want to enter. So I want to get the retrace to the pressure line entry. That number is 53,105. So if that happens, I want to order at 53,105, right? And I'm cool with that even being a market order. Like, I want my position. No, I take that back. I can't. I guess I can't do that. Oh yeah, I can. Okay, so again, if my trigger price hits, if it comes down to here, and then I get the retrace, it just like it goes crazy, and then it goes boom, and it goes tricked you, and it comes back here, then I would enter a market order immediately, and then my intent, my thesis would be that it would drop lower. Like I said, I'm in a prime position to show you another breakout trade and show you how to make $200 in short order, or 2,000 in short order, whatever. But I'm not doing that right now. I am instead focusing on this. And so in this scenario, I would want to order, doesn't matter, right? I would want to order, like, let's just make up a number, right? I want to order $500. Yeah, well, it doesn't even matter. Let's just say 250, right? For the sake of just putting it. I want to order, but I want to order by value, right? And so I want to order something like that, right? I want to order, let's just say 300. I want to order $300 worth of AVAX. If and when this happens, it needs to go down, touch my activation price, which is 52,610. That lets me know that I believe there's been a deviation in the market that will send the price downward. However, I do believe it will go back, it will retest the DIIO pressure line, and for that reason, I will go ahead and order, I want to fill my position if it touches that line. So at that point in time, I will instantly fill my order with short money, like right then and there. And so I would do that. And then I also want to have a stop loss. And so I'm going to say, my goal will be, I don't know, whatever it is. I'm just making up stuff at this point. But I'm only willing to lose, I don't know, what is this? I'm willing to lose 10% in this trade. No, that doesn't sound right, because I only stand to make 94%. So yeah, I guess 10 would be fine, right? So that's nice asymmetry, 94 and 10. So I'm willing to lose $3 to make $28. Again, just kind of making this up, and that would be good. And then I usually like to go isolated. Cross is another way to do it. I just personally use isolated. You should definitely know the difference between the two. And then that's it. Oh, it just took away everything. Took away all my insights. Okay, let's do it again. Right, 52,630. That's my deviation to order what I want to order. 200 will be what I want. To fill that position. It will be a short position from the time it's ordered. Man. It reset everything. Okay. It's fine. 52,630. 52,630. My order price, market, right? So it's going to order it instantly if that happens. And what else? See how it hit that pressure line, by the way? That's how good pressure lines generally work. I mean, that's pretty cool. That even if it's going to keep going down, which I think it will, which should be a good example for this conditional order, it's just kind of neat to see that those DIIO pressure lines work the way they do. It's not an accident that bounced, right there. And if it went upward from there, it wouldn't be an accident. That's just, the data. And it's data that a lot of people don't have. So 52,630, why? Because of the deviation factor, right there, about 625, 630. So let me be a little more conservative to make sure there's a true deviation. Order price. So when it comes back up to my order price, oh gosh, I almost was gonna mess that up. So if I did it there, it would have ordered at market. Okay, so forget everything I just said. I want it to order at limit. I was thinking when it goes back to the limit, it'll fill my position, but obviously I was having a senior moment. So it has to be a limit order, right? That's the purpose of me saying I need it to go back to 53,105. So 53,105. And by order value, again, for the third time, we're going to do $200. So now I'm in this trade setup with the conditional order where it literally has to go down here, show me the deviation, which may or may not be right. I mean, right? Because this was deviation from the first one, and it obviously went way back up. And that's why you probably, if you're going to have a trade and you're not paying attention, actively trading it, you want to have, stop losses on with nice asymmetry, what I call asymmetrical trades. But with that being said, the whole goal would be to see it drop, go back up, and then fill my order at the line, right? That's just the thesis behind this individual's trade. And the next pressure line down is $50.33. So if I were just using that and nothing else, I was being a little conservative, I'd have myself an 8.6 risk-reward ratio. And I hope this does not reset it again. But if I wanted to be conservative because I'm newer and I'm trying to experiment with these things and I want to use numbers that don't freak me out, then I would do this. Okay, I'm so glad that it didn't change my whole order. Okay, so for shorts, in a short situation, it's saying that it still has my information right there. So now I can go and I can set my take profit and my stop loss, which I always, want to make sure I at least look at. Am I using one or not? Am I actively trading, or is this a set it and forget it type of trade? Doesn't matter, right? But we want to figure something out. And so I had mentioned my take profit would be 50.41. So something like that. Oh, it's not even that much. I'm so used to larger numbers, but this one I'm just shooting for 13% because it's very low leverage, right? That's why. So if 12, then I need my risk to be, fair for that, right? So my risk needs to be something like maybe 2, which would allow for approximately a 6, slightly better than 6 risk-reward ratio. So I might do something like that. And I don't even have to know much about it other than, 2 to 12, right? So I'm willing to risk 1 part for 6 and a quarter parts reward, I believe it is. Oh, I'm glad it didn't register that. Okay, so now we confirm, and now I can open it, right? This is a conditional order, which means it's not going to enter my order unless it hits that trigger price of 52.65. So now I open it, confirm, and you see how that trigger shows up, and I can drag and drop that trigger price as needed, right? So that's kind of cool. That's a trigger order. Now, let's do something else. Let's make sure that hedge mode is on, right? So we can see over here, hedge mode is on, right? Which means I can do a few different things on positions. People should read what hedge mode is. So now I'm looking for a break of the pressure line that maybe I want to enter a market order, right? So now I want to enter a market order. I want to change my leverage, and I want to look for the deviation. I want that deviation factor. So I'm looking at 3 trend snipers that say I'm good. I'm looking at trends that say I'm good. So I'm going to probably just go ahead and say that I'm interested in a very low leverage because I'm just above a pressure line, right? So I want to enter into an overall lower leverage position, and that's what I want to do, because I'm not even really certain that this pressure line will be breached. But I see a deep blue 4-hour, I see a deep blue 24-minute, deep blue 10-minute, I see a cyan 2-hour. Let me look at the 12-hour. I'm just building my case, right, for something a little just dangerous enough for me to find success with this particular move. And right now, honestly, the long looks better, but I believe that we're gonna probably fall through because I see so much blue in the breakout bars. It's just a kind of a matter of time. And so with that being said, let's see what's going on in the 6-hour doesn't have blue breakout bar propensity yet. I never use the 5-hour, but let's use the 5-hour. The 5-hour is deep blue. So I like it. So I'm going to do something that I normally wouldn't do, which is short right at a breakout bar, or pretty close to, right near a pressure line. But I'm a good distance away, so if this short were to work, I feel like it would be good. And I kind of know like where I could abandon it, right? So with this is just kind of to see what I can do. Let's say market order, we're going to go there we go. I don't know why it was there. Okay, so we're going to go to order by cost, right? And I think from here, you see how I said the long was better because we're like right at a pressure line, but I think the overwhelming, real trend and pressure is down. I think it just needs this moment of upward volatility to take us there. We're in standard deviation -2 on the 1 minute. We're still kind of flat on a 4-minute channel. So I think there's just going to be a moment in time where I would say let me give it a shot. But unfortunately, AVAX, and this is kind of a good case study for hedge mode, and maybe it's a good case study for confidence in the move. I just see too much evidence of a short being the thing to do for me to really think that even a demo long is worth it. I feel like this up pressure is just taking me to more of an entry, so I'm going to go for the short, and I'm just going to probably prove a point with something minimal. So let's see. So what do we have? And then see, I do have a conditional order kind of pending. Yeah, kind of neat, right? You can go see where your pending orders are and so forth. So I'm just going to again do a demo trade. Let's do this one, $100, and I'm going to go ahead and just do a market order because it's low leverage for me, and I'm going to just short it from right about. Now we could go up further, but I guess I could close this out, and it's a good example of how I could just get out of a trade if I wanted to. I'm going to open it right about here, I think. No, you know what? Let me do something fun. Okay, so I'm just so you guys know, I'm watching the 30-second, and I'm kind of using that entry principle, right? So we're going to see what it does, right? It doesn't serve me to go against the 30-second on a short because it won't be fun for you guys. You guys will say like, oh man, that's scary. It backtracked, And let me just show you what the 30-second looks like, right? Here's the opposite of what we've been doing. So this is literally what the 30-second looks like. not a great entry. I mean, it is a great entry, and maybe for a long, but if you look at a lot of the other data, like where we're at on, this channel, for instance, it's like, no, you're really just waiting for your short. And the more orange we get, the more it's kind of like giving you an opportunity to enter probably a better trade. But you can see what's happening. I don't even have to look at the charts to say, oh, Bitcoin must be going up. And well, actually, Bitcoin is going up, but only in tiny time frames. If I look at the 2 hour, it's like not even noticing this, right? But it can affect margin a lot. And so since Bitcoin kind of runs the show for alt price action, we really, have to be cautious of when to enter leveraged shorts. And so I'm going to kind of say that like right about now, I'm looking at crazy time frames. I want the orange to go away on some of these just like tiny time frames. Again, just for the purposes of entry. I want to make it clear I've evaluated much larger time frames and pressures and energies to decide that short is the direction I want to go. And at the same time, I'm kind of like watching what's going on here just to get an entry that is probably a bit more conducive to price action that will rapidly go in my favor, right, instead of against it. So again, we're going to do market order. I see kind of like some initial signs of weakening, but nothing crazy just yet. And there's always time. I want to kind of point out, like, problem people have, I think, in this game is patience, right? They feel, and maybe they don't have the data, so it's difficult to know like where you should be patient. But like for the most part, we're probably gonna find a moment, where AVAX pressure concedes and we end up like going down, right? Like we probably will, especially when we have a nice big green candle. And if we've decided that we're really looking for the short because it makes sense, according to a lot of other things, right? Like small time frame channels, breakout bars in different time frames, trend data in different time frames. That's kind of what we're looking for. So let me just overlap this. So I'm not gonna like, it just doesn't make sense to do much just yet. And you'll see like how well I can conceivably time this entry. And so it kind of goes back to the thesis of if you could do something and get it right 1 out of even 3 times, and for every time that you were wrong, you lost 10%, and every time that you were right, you gained 70%, right? I'm just making up these numbers. But if that were the case, it would be so worth it to get it wrong to the tune of 10% if you could get that 70% gain on your third try. If that were the simple math all the time, I think we all agree it would make sense to do that thing, right? So that's the game, we play. And even for people who are not that great at it, that's, the way I see it. I'm looking at Bitcoin, and Bitcoin also is still in that up pressure, right? So this is where if I was really concerned, I would like have to decide like, what do I want to do with this position? Do I want to take my money? Do I want to evaluate trend and stay in it, and so forth and so on? I've kind of like already made my point, I think, on Bitcoin price action. I'll make another point. We can click on it and go right to the chart. I think that's kind of cool, right? We can literally click on it and go right to the chart. You can see where I last plotted that the 30-second had gone over while we're waiting for our AVAX trade, right? This could be the type of retracing you have to look for, right? I think we were at 20+%, and so you have to ask yourself, like, how would it really affect me or make me feel if I went from 23% back down to 10%? Am I going to lose? Let me protect my position. I loss is so important to me that I want to get out. You know, I'm going to move my stop loss right there. Cool. Now, if I get out, I made 3%. Like, that's my worst case scenario. And maybe I'll do that, right? Maybe I'll do that for the purpose of this demo. ETH, what's ETH doing? ETH is, you know, where it is. I'm 24 bucks below on ETH. If I evaluate both of these positions, now I'm only $50 in positive ROI. Maybe I want to get out of ETH, right? So people have to just decide these things. Do I want to abandon my AVAX trades, right? So you can kind of like just decide these things for yourself. And you can watch and zoom in as much as you want. I'm personally now, I'm going to go to focus on the AVAX trade, which I think will be fun for me. And I want to show you guys why I've been waiting, why I didn't take it, why I don't care about ETH, because ETH is just going to do what Bitcoin tells it to do. Look at the much more favorable position we are in to enter this trade now, right? Why enter it when this is fully green, when we could wait for some of this to shift, right? And so you might get to kind of see it shift before your eyes a little bit, which I think will be really cool if you do. And we'll see like what that looks like, right? So here's AVAX in some really tiny time frames. This is high precision, high leverage, high risk, high reward trading. This is absolutely the kind of trading that'll make you, you know, $3,000 in just like a couple hours, or whatever your, like I said, psychology of money permits. Maybe it permits a whole lot more. Maybe it permits significantly less. But I want to, like I said, prove some points on data flow, right? So now with this whole chart, if I knew nothing else, being much more red and much more yellow and red and, you know, things kind of like evening out a bit, I would say, you know what, this looks wicked smart versus jumping in when it's all green. Like, why would I enter when chances are it's just gonna like blow past my entry? And then I'll tell you, like, all I do is look for this live trend sniper to give me those insights. And I can pull up 4 trend snipers at the same time, and I'll have a much better experience on entry if I do it this way, even with a market order, than if I did it the other way, right? So again, here in this instance, we were just going to kind of mess around and do like a $50 market order, or whatever it is, just to kind of watch the percentages and see if we can nail an entry and see if, you know, this is like voodoo, or, you know, if there's something to this whole TA thing. I'm basing it on, you know, very, very sensitive data, but the purpose of the sensitive data is to have data with longevity, ideally. Bitcoin is not done, right? Bitcoin is not quite done with its move. However, if I'm looking at, you know, most of the time frames that matter for larger scale data, you know, Bitcoin is probably still bearish, right? Still relatively bearish and due for, you know, a comeback to reality, whatever its version of reality is. Again, this is just simply based on my own interpretation of data. So here we are with AVAX. Now I'm going to kind of go back to looking at AVAX data. I'm going to narrate it for you guys. The 3-minute is in a bearish trend. The 4-minute is in a bearish trend. The 1 minute is kind of like in transition bearish zone, not bearish, but in transition bearish zone. And I think that this entry is much more suitable, you know, for my entry purposes than it was a little while ago, when I probably would have just got stopped out because I was FOMOing or just randomly choosing, you know, an entry that it was not ready for. And it doesn't really matter. What matters is the spread, right? So now I think I'm in a better position to open my relatively safe low leverage short, right? So let's do that. I think that I feel pretty safe. So we're entering, you know, a low leverage short. We're just really looking at percentages, right? So now we've got 3 trades going at the same time. We have a pretty low leverage short. We're still up. ETH had retraced a lot. You guys saw Bitcoin retrace a lot, but due to data and conviction in our craft, we went ahead and just said, we have data that most people don't have, and we know how to use it, and so we're going to go ahead and play what we see. We don't need to watch YouTube or ask people what they think price is going to do. We have data, and as I've mentioned on a lot of videos, the truth is that the algorithms do not tell the future. They simply give people an idea of where we're at based on everything that's happened, up to the moment, and based on, I would say historical data up to present moment, right? And I think that's what people need to understand. So they have a better idea of what it is we're doing. They don't need to believe that there's a crystal ball. It's kind of a silly, funny myth. That some people have whatever, some way to tell the future. It's not about telling the future. It's about using the analytics to decide what to do. And right now, we're in the transition zone again in the 30-second time frame for AVAX, but that's okay. I can promise you, what's really happening, in my opinion, is we're experiencing bullish volatility out of Bitcoin. Right, that is where this deviation of price action and trend and all of it, is coming from. Volatility, deviation from our downtrend. This would be on a larger scale market makers, in my opinion, looking to take liquidity from the market for people who were confident in shorts, but perhaps entered at the wrong time in the wrong place. With tight stop losses or even liberal stop losses, and who are playing the market in a way that they're probably taking on a lot more chance and using a lot less data and statistics. So I'm going to, I think, go ahead and time lapse this a little bit just to kind of let it play out. But I had a fun time making it, and hopefully, just making some points, showing volatility, committing to the thesis. What was our entry on AVAX? 53.45. So we take this, and we want to kind of put it right where that entry was. Look at our max deviation on this 5-minute candle, roughly, since we entered the position. It's low leverage, right? So we can afford a lot more volatility, right? Right there, that went to as high as 0.68 organic against my trade. And however, because it's only 3.6x leverage and it's not 20 like some people like to use, all you have to do is take 3.6, multiply it by 0.68, and you can kind of figure, okay, so the most so far, that I've even had to deal with as a retrace has been 2.45%. And I think that's important because we have to acknowledge that if it were, 12 or 14x, then, our most significant drawdown would already be, 12%. And that's a lot scarier for people. And so that we haven't hit our conditional order for AVAX. I'd love to see that trip just so people could see what that looks like. But I think that for a good trader who's committed and who understands the data, this is a part, this can be, again, manually trading. This can be a part of the process. And so I think a person, when we talk about absolute value, a person has to understand that negative 3.23% as a percentage is not scary, I don't think, to most people, right? And when we talk about what's the absolute value of the trade, what do I really have at risk when I think about absolute value? Well, for one, because this has no stop loss, the absolute value is 176, which AVAX would have to go all the way up to $67 without me noticing it almost for that to ever happen. Possible, not probable. And so, yes, we're down 4% as a percentage. I don't know. Is that scary? Maybe if it's a $10,000 position, it's a bit scarier. We would all agree, right? When it's a $50 position, I can't let $1.83 stress me out, because the absolute value of $1.83 or the absolute value of an entire liquidation at 176 is not significant to me, right? And I would say, kind of the same thing about Bitcoin. Bitcoin would have to, in this case, it's 13x leverage. There is more capital behind it, 991 in total. It would have to go to 68,542, kind of without me noticing it, to stop me out, so to speak, right? And this is where we're at. So it would have to climb $5,000 to snatch my position of 991. Now it could go down and get me into the negatives much sooner, especially with 13x leverage. But just keeping things in perspective is super helpful. So right now, with today's trades, I had, I think, plenty of opportunity to get out in profit. I'm kind of interested to see, where it's going to go. I'm probably not going to let myself lose much money, but I think I've made a lot of points, as to how to play the game. So you've got 83 bucks here, minus 22, right? So you maybe have 60 minus 2, 58. So you have to kind of keep that bigger picture scorecard in mind when you play. This, probably not my best moment, right, in trading, even of today. If we go back down, I'm going to look great. At this moment in time, might be questionable. Might be like, shouldn't you get out of those, bro? It's up to the individual. It's up to their psychology of money. It's up to their understanding of, what's going on. These are all just cool things to consider, and to watch and to keep an eye on. Now, something interesting to kind of let this play out a little bit. And I probably, like I said, I may time lapse this, because we're at over 2 hours now, but I think it's a very valuable video for a lot of people. No, maybe I won't time lapse it. I just don't want to drag you guys into a lot of consolidation. I like that you get to see my moment of, not so greatness. I think that this is it, right? If I were to screenshot it, say yeah, this is my moment of question, right? I think that's a good way to look at it, because I think people learning to play the game would kind of come into a moment like this, and maybe they'd get scared and they'd bail out. But the more you understand the data, I think that the less likely you are to, you should just start making better decisions, to be honest. Like me, I stopped trading after, 6 p.m. I just I'm not going to do it. I'm going to generally take my profits. But this is kind of an interesting, fun, moment of question. But if I wasn't looking at Bitcoin charts and I wasn't looking at price action over here, kind of feeling hey, we're kind of maybe getting to that point where we might actually be in a place where I get to show everybody what it looks like when Bitcoin corrects, from this up pressure in this case. And so I can promise you that is what will drag my other positions. So Bitcoin, it's the weirdest thing, but Bitcoin is in this moment of up pressure. Even in the 5 minute, right? It's in this moment of up pressure. It seems to have just hit a little bit of resistance. And so what will be fun, and what I'd like to show you, realizing that people can watch this at 2x speed anyway, I would like to see if I could capture a bit of a reversal such that you see Bitcoin retrace to $200, and such that you see the AVAX position go into profit, again, as a percentage, and such that you see the ETH position go back into profit, right? So I look at these 3 trades and I say to myself, right now, I see 2 reds and a green. Should that scare me? The colors may actually scare somebody. 2 reds and a green. I'm losing more than I'm winning, but I'm really not. I'm really up 24 bucks, right? So even if I'm playing at a lower level, I'm actually up 59, 54, you know, minus 33 is positive. So I have to like keep that stuff in mind. And then I would kind of watch, and I'd look for a potential turnaround. And that's what I kind of want to see if we find. I want everyone to be aware that I could literally close all positions at the drop of a button right here, very, very easily, right? So I can make sure that I don't lose. In fact, I don't even want this stop loss because I'm just way more interested in showing people what it's like to be in trades. I'm interested in showing people, you know, how data works. I'm interested in walking people through psychology and helping people understand, you know, what it's kind of like to play the game. If I need to, just to not lose, I'll show that, you know, because now I think we are upside down. But let me see what's going on here. Yeah, see the 3 minute is squeezing. So now, you know what, I'm going to leave it open. I'm going to show you what it's like to be upside down. And I think that if I lose, I'll show you how to close out all positions. I won't lose much. Again, the lesson is way more valuable. But my intent would be to show you how to close positions. And at the same time, we would just add up, you know, this cost, right? So it's like, what am I really losing here? Is anything in danger of liquidation? No. And if I'm gonna lose, you know, what am I in danger of losing? Right now, 11 bucks, right? 28 minus 39, right? So it ends up being a negative. So we watch this. We'll maybe even give it a chance to go into negative territory. And meanwhile, I'll just kind of narrate, you know, right now, I still see the 6 hour as being blue. I still see the 4 hour as being blue. I still see blue movement monitors on the 1 hour, on the 45 minute, and on the 24 minute. And so price is a little bit, you know, irrelevant to me. Now, do I have a place where I would pull out because it's just too much? A pain threshold, if you will? Yes. Oh, it hit my stop. Okay, so, you know, I guess I got out of that one. These other two, I have to be careful, right? They don't have stops. They don't have stops. So now I'm kind of watching over here on these other ones. I see orange on the 10 minute. I see a channel being broken on the 1 minute. I don't know how much upside down I am. I think I'm like 32 bucks upside down. But I really want to see, we have to pretend I'm in the Bitcoin position. I guess that kind of shows you, right? Like that was my safety net kicking off. Now anybody watching this can see like I did have that position totally protected. I'm at a loss, unrealized in these positions. However, I've seen unrealized losses go into profit before, and I'm watching the Bitcoin chart on another screen, and so my intent here would be to see if I can show what it looks like for these assets to kind of like fall back down. Because if they continue to deviate, you know, from the channels that I'm watching, then I would just pull out of them, and I'll show you the close all button, and we'll lose, you know, whatever it is, 40 bucks, maybe 40 bucks or whatever it is. I don't even care if it's 50. Again, the things that I'm showing you in the video are significantly more exciting to me than the pain of loss. Let me see, 50, no. 15 was what I was wanting to look at. Okay, so I'm trying to look for the next closest volatility cloud and see if it makes sense to turn this into a lesson on holding your trade, or see if it makes sense to turn this into a lesson on when to cut your losses. It will be a lesson regardless, right? So what I found the 45 minute volatility cloud is a useful one. And I really believe that we could see that Bitcoin pressure line get tested. I think that that's possible also, right? The orange, which was at 64, 521. So it's still right about there, right? We see that pressure line at 64, 519, at which point my ETH position would be upside down quite a bit. But I think there's a little lesson there in psychology, and if it costs me $100 to teach it, then I'm going to teach it just so you can see these numbers on the screen. Because I usually only show, well, I mean, I show you everything, but it's turned out to only be wins. so I want to see if again this ends up being, whatever it is. I think at the end of the day, a $70 loss, where we just go ahead and say, hey, you know what? The 1 minute, the 30-second, and the 3-minute have all gone into bullish trends, which they have on Bitcoin specifically. And so it's time to abandon this trade sequence, for these couple trades. Or, hey, wow, it rejected right at the pressure line. Like this up pressure was so scary, but it rejected right at this line, right? I don't know if what'll happen, and there's no guarantees on any of it, which is why these little videos are kind of fun and exciting. But we could easily see a retest of that pressure line. It's the only one there, and it is just simply a DIIO algo. And I think it'll be fun to see if we get to experience this overwhelming negative, right? -6%, -7%, right? You can just pretend those position sizes are whatever they are. Right now, I'm gonna give the exchange, $70, $75, if I'm wrong, and I'll show you a manual stop loss, because Bitcoin I had a stop loss on, so it secured my profit. We saw how quickly I was up, $200 and something. I was up 23%. Again, I was more interested in the tutorial than I was in making money on this. I basically, obviously just do that on my own. And these tutorials are for everybody. They're a much more valuable lesson. And obviously, I can help a lot of people with these. So let's see if we get a correction out of Bitcoin. I'm watching it. Let me kind of show you what I see, right? That way you guys can have an idea. Because these positions are not controlling themselves. ETH is not controlling itself at this moment. AVAX is not controlling itself at this moment. Bitcoin is controlling both of them at this moment. And so this is now what I'm seeing in these time frames. And so we're still seeing flashes of blue, right? That could have been the end of the move, but I still feel, there's a lot to be said about blue lines, and although this 5-minute is orange on orange, and you can see how powerful that is, a lot of orange on orange can be very powerful. We also have to kind of keep the amount of money we're dealing with in perspective, and we have to keep the time frame of the orange on orange in perspective. And also we have to keep the fact that for 16 hours we've been very bearish, and so it makes sense that at standard deviation -3 we would see a bit of a breather before we go back down, right? So again, this is kind of what matters. I use the word guarantee loosely, but there's a strong probability, and it's almost a guarantee, that AVAX and ETH are just reacting to Bitcoin. And so as you can see, here is the pressure line. I love that I just saw a flash of red, right? So that volatility cloud is rearing to a lot of the world its ugly head again, and that's what's going on, right? So we have this nice moment of up pressure, took us back to the median for a 16-hour channel. We still see blue movement monitors. We're still operating within red volatility clouds in the 2-hour, the 1-hour, the 45-minute, the 24-minute. Only the 5-minute is experiencing a green volatility cloud, right? Implying that it's a moment of bullish volatility. and then even the 4 hour is now kind of further, moving toward a red volatility cloud. And so these are the things that we're really looking for when it comes to data. And then we can kind of go back to AVAX. We look at our trades, right? They're looking a little better, right? We were at negative 65, now we're at 42.2. So our trades are looking a little better. We're just using data, nothing else. And now we get to kind of go back and look at this data, and we're looking at very sensitive time frames, right? Volatility cloud to the red, opening up in a red channel. The 30-second, obviously that doesn't mean much. The 1 minute, so the last 200 minutes have created this type of trend. Got to keep your mind on that. And so all of these little trends mean different things. We have a lot of room for correction, at least to here, right? Even if we're just kind of looking at it that way. On the 6 hour time frame, we have room for correction, not just to the green line, but below, which is why we have that conditional order set. We are previous candle bullish now, bearish. We're in the transition zone at least. We're not quite confirmed for a short, not even in the 30-second. Now we're getting there, right? Bearish transition zone. So when we get the full-on macro signal, that is when we would say, hey, the 30-second now has a nice confirmation for a bearish entry, right? And then we would say the same thing for the 1 minute, 2 minute, 3 minute, for people who are looking for very, very precise entries. And so then we can kind of go back, if and when we see those transitions start to take place. Again, Bitcoin is probably what matters most. That is when we will see these unrealized profits move back in the direction of profitability. And so I'm going to time lapse it from here, and we'll see if I can leave it open until we get to a moment of profitability. If it doesn't get there, I'll just give you the transparent results of what happened. But I want to give the data a chance to work and give you an idea of what it looks like from a time perspective, right? So that is UTC time. That is not real. I generally have to change this. Right, so you can see it's 10 in the morning, so I'm full of energy. I have the whole day ahead of me. I have different things I can do. But the thesis of this is a moment of volatility is already kind of beginning to rear its pretty head. So I always say rear its ugly head. So it's nice to rear its pretty head once in a while. So now I'm going to time lapse it so you don't have to sit and wait and listen to me talk. This video's gone long enough. But I think it's a great video and it covers so many things, and I'm sure Joel will chop it up and make it palatable so people can watch it in segments, and that'll be nice too. Okay, cool. Time-lapsed it a little bit, still a little bit indecisive. As I mentioned though, this is going to turn into a lesson on sticking to your thesis, even if it means cutting losses, right, in this case. I think it was clear we had many moments in time to protect trades and things like that. There's generally a lot more time than you think. There's almost never a reason to FOMO. Protecting your capital is always a good principle, right? So a lot of things that we've discussed over the last few videos I've put out this week, and we talk about absolute value, right? Like percentages are one thing, right? But the absolute value behind the percentages is really what matters. I've moved like 4% trades that were very high absolute value, whether a win or a loss. And some people may have 137% gain, and the absolute value behind that gain was not significant. So you have to just play your own game. That's the beauty of this space. It's up to you. So let me show you guys in MSAs the chart configuration that I think is pretty cool for entries and exits, right? As I mentioned, I'm mostly interested in Bitcoin's performance right now because I have 2 positions left in these demo positions that are specifically for, specifically for demo, but to kind of show, why understanding this data is useful. So on the 30-second only, this is where we're at. This is really the only one to watch until we have a reason to watch the others. We have to be cautious of the potential that our trade could fail, and we need to just take profits, cut our losses, right? Because we see Trend Sniper is green on these others. The only reason I'm really kind of honestly still in it is because I'm also keenly aware of where we are on what I'm going to call nano time frame channels, right? Like this 1 minute. We're in standard deviation zone 3 of the 1 minute. And I also know how close we are proximity wise to this orange pressure line, right? I might need to take that off. Let's see if I take off dynamic pressure lines. Yeah, that's what I thought. I was like, that's an awful lot of lines on that chart. I'm just going to kind of go back to my normal configuration, remove a lot of those lines. You'll see them just disappear. Now it's cleaner, right? I'm just looking at that one, which is the a two week pressure line configuration. That's the one that I believe we could retest. And if and when we do, and here's a great example of finding a nice entry, if you believe we're going to retest that line, then you have a great thesis for an entry. If you have what you think to be a great thesis for an entry, then you can actually do a number of things with it. And hopefully I can show you those things. Let me see. How do I get it to? I'm trying to figure out where my little box is for my drawing tools. It went away. Okay. Well, if I can't draw with the loom pen, I'll draw with the trading view pen. But you guys know where now the Trend Sniper data is, right? We can all kind of see that it's right here. This is what we're looking for. For those of you who are aware of confluence monitor and aware of sensitive zone momentum, for those of you who are aware of what these other boxes actually mean, active money flow, like all these things are very powerful too. And at the same time, they're definitely more sensitive, more flippant than trend. Trend is a word that is a lot like zone, and so to me, trend consequently moves less emotionally, less flippantly, and that's the only reason that I even look at the 30-second or the minute. It's because I want to find a highly precise area of entry, because I happen to do intensely magnified trades, right? I can 10x a large capital position, and I don't want to have to sit and wait through the retrace if I have the precision to not have to do that, right? More often than not. So now we're starting to see things kind of flip our way. I don't really have to look at the Bybit screen to know what's going on. I know that my positions are going less and less into the red, yet we still have a bit of room to go on the 1 minute. And what happens is when all of these different trend snipers from just these few sub 5 minute time frames do, if and when they do begin to show bearish movement, and when we start to see volatility clouds breached, right? This is another nice little sign. When we start, like we've already seen it here, but this is such a tiny time frame, we don't get too excited, right? So we start to see these volatility clouds get breached. That gives credence to our thesis that downside is the position to be in, shorts are the position to be in. We're paying attention to our channels, right? Again, that's a 200-minute channel. So it just lets you know it's possible that we're in this pretty significant window of down pressure. And over the course of a 200-minute trend, which is what, 3 hours and 20 minutes, this is not crazy to have a moment of up pressure, right? And still be on our way down. We also had the thesis of, let's find an entry here. So if I was going to find an entry here, it would probably honestly be right about now. just so you guys know, you've seen this chart now, so you know what I'm looking at. And those are some of the signs. Now we can look over here at quadrant 2. You see it's bearish, bullish zone. So we don't have to get too excited, right? 32nd is doing good for us, do good things, right? But we don't have to get overly excited. And here we are in time frame, or excuse me, in our actual live trades, right? So they're just getting less red. That's not too exciting, but they're getting a little less red. And as we start to see transition of this one, right, of this, I don't know why I moved my whole thing. I was just trying to move this. So as we start to see the trend sniper transition in larger time frames, with the next most notable thing being if, let me drag this arrow, this starts to turn orange, which it just did, then that's like the next noticeable sign that we might be seeing expansion, right? Okay, now it's not just that degen 30-second time frame doing its thing. Now it's possibly moving into still the degen 1 minute time frame doing its thing. And then, obviously the next place we would look, if we want more certainty, we still want to be relatively sensitive to the entry, we would begin to look here, right? Trend sniper for the 2 minute. So we would see just that little transition, little by little, from the 30-second going red to the 1 minute going ideally red. And then usually right then and there, if your conditions are conducive, in at least most respects, and if you are seeing key volatility cloud breaches relative to the right setting on the volatility cloud relative to the time frames of your trade and things like that, then that's great. But again, so far even the 1 minute has not shifted. So those are some of the things I'm looking at. This is a configuration I did want to show you all. So you have it, and then we can kind of like go back and we'll time lapse the rest of this. But I wanted to share that setting, and oh gosh, I don't know where the actual Loom info is.